All right, what's going on, everyone? Welcome back to another morning live stream here at Predicting Alpha. I have the one and only Jordan joining me this morning on the stream. I saw everyone shaking in their boots this morning. There's a little bit of a sell-off in tech, and I thought, Jordan, maybe come on here. Let's really break this down. Let's talk about what's going on. Let's talk about managing a portfolio, and hopefully we can all make, not saying we may not even be making bad decisions, but make good decisions and really have a grasp on what's going on right now and what we can expect, right?
Yeah, I got a frantic message from Sean this morning saying, market's getting smoked, people losing money. We gotta solve this. So
We got to rally the troops.
we gotta rally the troops. We gotta pump you guys up. So that's what's happening over here. So yeah, why don't we just chat about like what's really happening right now? Nasdaq's down quite a bit, tech having a huge sell off, and a lot of people losing a lot of money. And I really, like these kind of days, really show us how important it is to kind of have a hedge, right? Maybe not necessarily a hedge, but something that, is going to make money, even when, let's say, you have these massive sell-offs, right? We have people who are, let's say, uh, short option premiums, and then also long equity in their portfolio, right? And both of those are actually short volatility, right?
Mm-hmm.
One's
You want to explain
explicitly
why?
short vol. Well, yeah, one's explicitly short vol, and the other's implicitly short vol, right? When the VIX, let's say, comes down like crazy, sorry, when the VIX rallies, you're going to have the Nasdaq um, uh, come down, right? So I think that's people don't really understand that uh, you actually short vol on both sides of the portfolio.
Mm-hmm. You think it's a hedge because you're like, okay, I'm long equity risk premium, but then you're also short variance risk premium, or you're long variance risk premium, and you're like, but exactly right. Volatility picks up like crazy when stocks move down on average, right? So you end up in a spot where you're like, I have my RSP doing this, and then I have my vol account, my options account where I'm short vol exclusively, pretty much. Both get hit at the same time, and it feels really bad.
Yeah.
So I guess a lot of the times though, people aren't necessarily looking at those two things as like the same thing.
Mhm.
You know what I mean? So like, for example, if I have a retirement account with my long equity portfolio where I hold the S&P, I actually don't view it like I'm not thinking like this is all my portfolio. I have like my account here that I'm trying to learn more about trading, trying to beat the market, stuff like that. And then I have this other one here that's more like a safe investment, trying to just build for my retirement. So do you think that everyone should look at their total exposure across those things, or do you think there are cases where, you know, because maybe there's different time horizons on these investments, things like that? Do you think it's okay to view those as separate things?
It really depends on the risk profile, right? So, if you're, I would definitely say they're not two separate things, right? At the end of the day, it's your money and how your money's allocated is one big thing. So, um, you don't really want to be short vol everywhere, right?
Mm-hmm.
In general, you want to be short vol, right? That's where most of the money's made. But you don't want to be short vol everywhere, right? You want to have some exposure. Right? Think about your career, your job. Everything is short vol. When the market goes down, people get fired, right? Like everyone is short vol. So always remember that. And it's good to have some long exposure somewhere. Maybe it's selling the body, buying the wings. Um, but also, Sean, you know what I noticed? What I'm thinking is, and just from like talking with our team there is people just been winning almost every single day the last couple of weeks. No
Mm-hmm.
big losers, right? Vol's been just getting smoked. Most of the guys have been short vol. There's been plenty of opportunity where vol looks overpriced on certain names, and so when you get one big loser, one day where there's a big loss, um, maybe kind of get some shaken a bit, you
Yeah,
know?
or it's like you know, things have been going well for so long, but you only remember the last bad thing that happened, right? Where we have a tendency as people to like focus on the bad, not the good.
Right.
Um, and I really, I think you're probably right there. Um, but there are some cases like earnings, for example, over the last couple of weeks haven't been phenomenal.
Mhm.
It's probably been break even or slightly overall. Like you spread your bets, a small loser. Um, and that can be frustrating. It can be frustrating to have something that's positive expectancy and it's going through a drawdown.
Mhm.
So what would you say to someone going through that who's maybe this is their first earnings season or something like that?
That's their first earning season. Um, I would have to say, good luck. It's gonna be a bumpy ride. I wasn't profitable my first earnings season. There's so much nuance when you're gonna be putting yourself in a position to trade to 300 bullets, in a few weeks. There's too much nuance, right? In execution and all this stuff. So, uh, you know, I'd be super surprised if you come out profitable. I've seen a couple guys do it, but I think that was more of luck than actually anything else. Um, was there any good? I know PLTR was a fantastic earnings today. Was there anything else? Was there any bad ones today?
There's a like there was no like there's a couple like really pretty big blowouts. Um, I know a couple of the buddies, a couple of guys in the group were in a few of those.
Couple of
Uh,
buddies.
a lot of small losers across the board, though. Nothing like crazy, really.
Oh, so no big lot, no big blowout.
No, no, no. Nobody lost their shirt. Nobody's at the soup kitchen.
Okay.
Nobody's using Tim Hortons Wi-Fi to come to this live right now.
Yeah. Yeah, maybe I'll do a little. I'll show them PLTR and why I decided to and basically show them a long vol hedge and how that worked.
Yeah, for sure. Um, and then Jordan, what I want to chat with you about is you
Yeah.
know, I think we need to spend some more time talking with the members about portfolio management and like building out a book.
Mhm.
Just because I'm noticing a lot of concentration in certain areas, such as like uh, a lot of our members, for example, are just short vol across like 5 tech names,
Yeah, I noticed that too. I noticed that too.
right? Or strictly trading, earnings, uh, but like are pretty fresh to the short vol game,
Yeah.
right? And the this type of concentration carries risk.
Yeah, huge risk. Like one of the biggest mistakes that I've made too is saying like, oh, I can short vol on Microsoft and short vol on Apple and be diversified. You're not. You're in the same position. Um, or I could sell puts, or I could sell straddles on the S&P 500 and buy S&P 500 shares in my long-term retirement portfolio. You're still trading the exact same thing. You're short vol on both sides, and that's really not going to it's not going to work. Well, it's going to work. It's going to work, I should say, but the drawdowns are going to be humongous.
Exactly. Yeah, yeah, yeah. Here, so he said, but like, isn't that so? We have a question here. He's like, foul animals asking, but this concentration in tech and stuff, is that not a function of the scanner? Meaning the opportunities out there are weighted towards tech.
So
Not that the scanner is like skewed, but the market action that's presenting more opportunities is in the tech space.
right. So exactly. So let's say okay, a lot of overpriced vol in tech space, right? Or a lot of high vol in tech space, and you want to come in and sell that. Well, you hopefully you're not going to put it all on the line there, right? You're going to bet pretty big for sure if you think that there's enough edge, and you're going to sell vol. Um, but somewhere in your book, you should have something that's different. That's earning you. That's let's say a little bit of a long vol. Maybe you're buying longer dated. options to offset your shorter dated position. And I was going to show you guys an example of that just to maybe bring it all home.
Yeah, here I'll make you the host, Jordan. You can definitely do that.
And then we'll jump more into that.
Yeah, exactly. And then I think we should go down that rabbit hole a little bit, because that sounds all great,
Yeah.
but going out and doing that, like, how do I balance this? Right? Because in the
Exactly.
end of the day, something to think about is I have to take on risk somewhere,
Mhm.
right? So, am I, what is this hedge doing for me? Am I just smoothing my P&L? Am I reducing my expectancy? Like, what are my trade-offs of doing something like this? Why does this make sense to do? And how do I do it?
Yep. Okay. Let me share my screen.
Yeah, you're good to go.
Yep. Okay, guys. So here is PLTR. This is a position I had on yesterday going into today. So let's take a look here. This was the original thesis, right? Just like the vol's overpriced for the front month. So let me just go and sell some vol. But what happened was, the PLTR can move like 30% in a day, right? So I really didn't want that exposure. I didn't want that risk. But I also wanted to get, well, I couldn't get any good size on, but imagine I wanted to get some really good size on, right? Well, I couldn't just continue to sell more and more of these, right? Pretend this is like the tech sector. You can't just keep going to sell more and more and more and not worry about, anything bad happening. So instead, what I decided to do was, buy some volatility in November. So I sold some vol in May. I said, okay, well, I'm going to buy some vol in November, and take a look at this position, right? It's the opposite. It's going to make money if PLTR blows out. So this is, and the reason why I bought this was I said, okay, well, this is probably not the vol is not going to change after the earnings event, right? And in fact, it actually got a little small uptick. So both sides earned, which is funny. You rarely see that. So, you're in a position here now where your risk is a lot less, right? Because you have that hedge there. So that's, that being said, take a look though, our position is still short vol. Right? We still have that same exposure. But now when we add these long vol sides here, our exposure is reduced. You're on mute there.
Yeah, no, it's okay.
Okay. So that is adding a long vol position just to offset that short vol.
So we have a question here. Pro Like Jesus is asking, why aren't more people doing gamma scalping strategies for hedges?
Well, it's a lot. So gamma scalping strategies. So gamma scalping just reduces your variance. Remember that. At the end of the day, if you're buying cheap vol, on average you're going to make money. Just scalping reduces the variance. If you're buying expensive vol, you're going to lose money even if you gamma scalp. It's going to reduce your variance, so it's going to basically make sure that you lose money. So at the end of the day, you still need to buy cheap vol, and a lot of people do that. So you'll have, let's say, a portfolio manager where he has a long vol book and a short vol book, right? So sometimes he's doing relative value, so he's selling vol somewhere here and buying vol somewhere here, and not delta hedging too much. Or maybe he's got long equity position here, and he's gamma scalping a long straddle in some cheap name that he thinks some name that he thinks vol is cheap on. But it's just, so a lot of people do that, but it's just about, finding a long vol trade and finding a short vol trade. Now, most of the time we're leaning short vol like crazy, right? And we're okay with that risk. We're okay with that, that variance. We know these days are going to happen. So it's not really like a big shock when they do happen. I guess you kind of get used to it. You just got to make sure that the P&L is continuing to grow and you guys are making the right decisions, right? And understand that sometimes you're going to have some big losses. So
okay, well, I'm going to add on a couple questions for you there, Jordan. So I think what it really comes down to here is like understanding different exposures you can have in the market and then making good decisions. right? And an accumulation of good decisions over time, right? Not every good decision is going to make you money, but an accumulation of good decisions managed well over time should make you money.
Yes.
So how do I know, one thing I've noticed is like, there's been a lot of emphasis on earnings. I don't want to talk too much about earnings on this. How do I know if I'm making a good decision?
You're making a good decision when you have actually spent the time to price vol and it's cheaper, or it's cheaper than what is currently being priced at, or it's more expensive than what's being currently priced at. And then as you learn more and practice more, you'll start to say, okay, well, am I doing well? Do I really understand what's going on here? I mean, it's hard to, unless you're doing like certain relative value trades, then it's a lot easier to say if you're making a good decision or a bad decision. But when you're going out, let's say selling vol in tech right now, well, the market could go down 6% tomorrow. You don't really know that, right? So trying to price what else is out there and really getting a sense of, okay, am I selling the most expensive thing today? Right? And am I buying the cheapest thing today? Right. And that's going to come with a ton of work, right? And talking to a good community, and eventually, you should if you're serious about it, you should definitely get there.
So something I'm thinking about here, Jordan, is that makes a lot of sense to hear, right? You're making good decisions when you actually are thinking about this thing and pricing it, instead of just like tech's down, there's no way it's going to go down more, so I'm going to buy.
Well, yeah, well that's crazy silly.
Yeah, right. It's like like as two sides of the coin, right? But tech vol is high, so I'm going to sell it. Instead it should be like, what do I think this thing's really worth? So one thing that I am thinking though is, I see the way that you go and price stuff out. I see the way that it's done at a really high level, but it's not really realistic to expect someone to just jump to that.
Right.
You didn't do it. Nobody really does it. Mistakes were made along the way, and not just mistakes, but like things that worked that you then pursued further.
Yeah.
Right. So like something that I've been thinking about is even if you are not, you don't have, let's say, a strong coding background, right? There are still ways that you can try and price the vol. And you should be always trying to do that. Even if it's like, a little bit too qualitative for what I would like, but it's like vol usually trades around 50 here. It's trading at 70. Why?
Yeah.
Right. I get it. It's trading at 70 because the Qs are getting absolutely smoked right now. Qs are down 4% this week, 3% this week. Tech's getting hit. This stock got hit pretty hard. It makes sense to me that vols should be at 70, or maybe even higher in the short term. Mm-hmm. But I'm looking at these 6-month options trading at 68. They're usually trading at 48. Maybe these are looking a little expensive. Right? Do I really think this is going to continue? Right? So it's a little qualitative, but at least then you're thinking about, right? And then it's like, okay, well, maybe you add on, how is it trading relative to like a basket of similar stocks? Or, if it's Apple, maybe how's it trading relative to Microsoft? Right? And so you can do these things that are not ultra advanced, but you get into the mindset of trying to formulate, like you get into the mindset of pricing the asset.
Exactly. Who's done such an amazing job at this is one of our interns, Margin. He's done I would say he's so here's someone that, like, let's say doesn't have a strong coding background. I was just doing a little bit of coding with him yesterday. He's got very little coding background. And in 6 months or 5 months, I've seen him price so many vols, man. We're talking probably almost 1,000 vols, 1,000 different situations, not 1,000 vols, 1,000 different situations trying to price vol. and it's just paid off tremendously, right? Like he actually goes into a situation now where it's like, oh, this is what I think it should be. This is what it's trading at. Okay, let me sell some vol. How much do I sell? Well, given what my current book is looking like, this is how much I sell. If I'm all cash, he keeps a lot of cash sometimes. But if I'm all cash here, well, I'm probably going to bet a lot bigger, right? Then let's say if I was already short vol somewhere else. I was just talking to a friend, and he was saying like, oh, I wish I knew, how IB would calculate the margins. He's got portfolio margin, um, because I'm short vol in other spots of my book, and I had to close those out to manage this short vol position. Right? It's like you have to look at your portfolio, right? And just like the way these guys think about it, like I'm looking at the rest of my portfolio. It's you really need to think about that. What is my global vega? What is my global theta, right? And um, and go from there, right? Just think about our Tiger Cub thing. We can't be short vol on VIAC, GSX, TME, all of those in size, right?
At the same time,
At the same time.
one trade.
Exactly. It's one trade. We can be short the basket in size, but you can't be short each component in size. So I think that's how you got to start really thinking about it.
For sure. So let's say I'm in a spot right now where I'm hurting a bit. I'm long some meme stocks or meme stocks, even like we'll say Tesla.
Yeah.
I've been long Tesla for a while. I'm short ball. And over the last month, my entire portfolio is down 20%.
Yeah.
25%. I'm getting smoked right now.
Yeah.
I don't even know where to start. Well,
yeah.
I have the terminal. I have the data. I've got lots of education.
Yeah.
But I'm in these positions, and I'm, I still like Tesla as a company, but I'm just getting destroyed. I thought Tesla was a good buy. Like I'm trying to just paint a picture of someone.
Yeah. No, I see the picture.
What would you say?
I would say, really take a step back and think about what your objectives are in trading, right? So, do you want to be a frequent trader and actually do this, right? And so if the answer is yes to that, I would say you need to change how you think about trading. For example, being long Tesla, there's nothing wrong with that, but we need a really solid reason on why we need to be long Tesla, right? And I think I've seen a lot of times where people are long Tesla with no real evidence on why they should be long it. Like we can never forget that these are some of the most efficient markets, right? And so if we don't have a good reason why we're in these things, it's going to be extremely difficult for us to make money, right? Quick example, being long Tesla 1 week after they've announced the moving into the S&P 500, your reasoning being because they're going into the S&P 500, it's not good enough, right? Everyone already knows this, right? So I would say take a step back and say, okay, do I really want to do this? And a lot of people will say, yeah. You need to probably change how you think about trading, right? Really think about, okay, I'm gonna wipe out what I know, what I've learned from whatever guru I've seen online. I'm gonna think, okay, Tesla's trading at $80 or $800, and here are the reasons why I think it's going to go to $1,000. But it doesn't just stop there, right? And then you go, here are the reasons why no one else knows that this is going to $1,000. Because if your same reasons of why it's going to $1,000 is the same reason everyone else thinks it's going to $1,000, it's probably not going to $1,000. So I'd really take a step back and really price it. This is why it's going here. This is why it's going there. Here are the reasons. And then, and here are the reasons why no one else knows about it. And that's the important part, right? Tradable. There's a difference between information and tradable information. Tradable information means it's not well known.
Hmm.
What do you think?
I, I I think it makes a lot of sense, but I really empathize with some of our group members who have like long equity and buy companies that seem like good companies. But you
Yeah,
know, if you're not thinking about these, a good company can still be overvalued. A good company can still be fairly priced.
dude, it's Warren Buffett 101. It's like he'd rather buy uh like the cigarette butts. I don't know if you know that strategy.
I think, yeah, I haven't heard about that in a long time, but
He'd buy terrible companies at a great price, right? He doesn't want to buy good companies at a terrible price.
exactly, exactly, right. And that's the trap, right? And like at the same time that I'm upset that some of our members and friends and stuff are long some of these, like ARK, for example, ARK. At the same time, in some of these cases, it was only a matter of time,
Mhm.
right? Like things can't just go up forever. And it's like, okay, the thing's corrected 10%. Okay. Like how is this not on the cards when you bought the thing? It's a mistake if that wasn't on the cards when you're looking at this thing rip up 2% a day for the last 8 months,
Mhm.
basically doubling in price, to think that this thing couldn't have a drawdown. We need to really, I think it's super important to be aware of your risk profiles.
Yeah, agreed.
What could happen here? What does this thing actually hold? Right? Oh, it's got a lot of volatility. Okay. Oh, it's concentrated in this sector. Okay. Well, I want exposure to that sector. Sure. This is probably a good way to get exposure to it. But what comes with that exposure? Right? You're not buying the S&P here where, you know, it's all like very diversified and clean and like sure, we have a good understanding of the drawdowns of that. It's like this could be a lot bigger. But the gains could be too.
Yeah,
What are you
cool.
thinking, man?
I think so. I think that's great. I think it's a tough game, and
Yeah. I think
a
it's
lot of people
definitely
just have to take a step back and just really think what their objective is here, and like, um, really be like, okay, I'm willing to forget what I actually know. It hasn't been working for me, and like, there's a lot of things that people learn, especially when they're younger, um, especially in the retail space, where it's like we need to forget those ideas and those concepts and move on to the next level. And it's really hard to say, okay, I'll do that. I'm gonna stay educationally humble and just try to you know relearn some things. And man, especially I've seen some people with like great coding skills that could easily make that switch, because they can quickly. The beauty about when you're able to code is that you can actually test things, and you can say like, hey, like, does this actually work? Does it actually not work? You know what I mean? So you can like falsify these gurus. Like, I remember I think we did this once. It's like the guy said, hey, this is my 3-step strategy. So we tested the 3-step strategy and it makes no money, right? But think about all the other people who bought that strategy because they weren't able to falsify it, right? So, you know, there's some really smart guys that I know that who can code and who are extremely smart. And I think maybe just the one key thing that they're missing is taking a step back and saying, I need to rethink this. I need to rethink my objectives. I need to rethink how I need to learn and what I should learn.
yeah. And like even things like you know, like I think one that we did was on the simpler trading IV ramp,
Oh yeah, that was a good one. That was a really good one.
right? Simpler trading says, there's these stocks that we see, the options, the implied vol ramps up into earnings, and we make money buying it before the event, selling it into the event. And
Yeah, sorry, go ahead.
what you're gonna say? Add something?
I was gonna add something to the simpler trading.
You're gonna what?
Um, I was going to add something that's simpler trading
Yeah,
there.
go for it.
We did the test was bank stocks rally into earnings events. 1 week before the earnings event, the bank stocks rally into the event. And we literally took the data and we did a live on it. This was, I don't know, maybe a year ago. We did a live on it. We showed the data, and that was not true. But I had friends that were coming in buying call options into these bank stocks because of that, right? Without being able to falsifying it. And I think that's I think that's like one of the key differences between a professional and a retail, or a professional and a non-professional, is the professional tries to falsify things and really tries to get an objective stance.
Awesome. So, guys, with that being said, it's 11 o'clock here. We're going to wrap up this stream. Jordan, thanks for coming on.
Awesome, man.
Guys, chin up. It's not that bad. And if it is causing you a lot of stress, we need to really dig deep into why and understand our books a little better. Right? We're going to be coming out with some content soon that'll hopefully, help a little bit, teaching you guys how to use the terminal better, to price assets better, make use of more of the features, lots of little things like that. And maybe more videos on us pricing assets using the terminal ourselves. So you have that to look forward to over the next week or two. I think it's gonna be a big help. And any last words, Jordan?
Just keep crushing it, guys. It's a small drawdown. You guys have been doing so well last couple of weeks. Exactly. So
don't stress. Okay, everyone, take it easy. We will see you on tomorrow morning's live.